Okay, welcome back. I hope you had very productive lunch. I've seen you all mingling, so hopefully that was productive. And we are starting our next panel. We will be talking about de-risking and insurance, as promised. So I'm passing the floor to Yuri, who will present the speakers and moderate the discussion.
Yes, super. Thank you very much. Actually, the structural design of this panel was done in such a way that we start with Markus Lippold from European Commission, because de facto European Commission and EU are backbone, which is not always clearly visible to people. But whenever we see news that some Ukrainian company or project received financing either from IFI, DFI or from local bank, but if you look just 1-2 layers deeper, you see that there was some involvement of European Union. It was either guarantee under Ukraine facility or some other instrument which made this to happen. Then we'll go with Olga Yeriomina, a second speaker, and she will present the most hot topic today of Ukraine renewable energy risk mitigation mechanism, which is a long-awaited instrument for the risking of renewable projects in the part of offtake. Then we'll have a German section with Matthias Koster and his colleague Geske from PwC and Hermes, respectively, and they will explain how German investment and export guarantees work. Hannes Helm, will present a view of private sector investor, from NOTUS Energy, who has been working in Ukraine for a number of years and is making finally, good progress. And then we'll jump to Peder, Anker, Larsen, and he will share, the experience of expert and investment fund of Denmark, which made landmark financing of large project in Ukraine and was overall very, very active. So the idea here was really to give you diverse experience and overview of different mechanisms, and to see what is in the work, what has been already used and is successful, and what needs to be still developed and designed. And I think we'll start with Markus. Please, the floor is yours.
Thanks very much, Yuri. Thanks everyone for having me. I just quickly pick up from this morning's session. So we got a good overview in terms of the status of the energy system in Ukraine, and an outlook in terms of how to best rebuild it, predominantly much more distributed. Regarding foreign direct investment or capex in general, biggest hindrance we heard was sort of lack of war insurance still at this stage, and also the need for price stabilization mechanism. I'll talk about that in a second. But I'd also like to point out, as Georg has said earlier on the panel, one of the most stabilizing measure for Ukraine is actually EU accession. And he specifically pointed to the electricity market coupling. You know that the electricity integration package is currently in RADA. It's being prepared for the second reading, but it's still a struggle. So in terms of market coupling being guaranteed by 2027, at this stage, I think it's not yet assured. It might be 2028. So those are significant legal packages which make Ukraine move sort of fast forward towards EU integration. And there's a lot that on the accession path the Energy Ministry and RADA obviously can do. In the meantime, though, we try to provide incentives for CapEx and FDI to come into the country. And one is looking at the price stabilization, de-risking, which I'll talk about a bit now. So I'm not going to go into yet what is beyond 2027. We can, if there's a question, talk about that still afterwards. So the that part of the Ukraine facility, which we call Pillar 2, the Ukraine Investment Framework, has set up together with the EBRD what is officially called Ukraine Renewable Energy Risk Mitigation Mechanism, URMM. It's all about building private investor confidence to invest. We are currently at the contractualization stage, having received the green light from all EU member states to go ahead with this. So anything that is linked to the Ukraine facility typically needs the endorsement of all EU member states. We've got a meeting this Friday with the EBRD to work towards finalization of that part. It's designed to stabilize the revenues for renewable energy producers and unlock up to 1.5 billion euros in new investment, supporting approximately 1 gigawatt of renewables. And that is also going to be accompanied by technical assistance. The UIF, the Ukraine Investment Framework, earmarked 180 million as a seed capital, if you will. It's 30 million, which is sort of financial instruments, and 150, which is unfunded guarantees. And we've had the first donor contributing to this, which was announced at the Rome URC conference. That was the Netherlands with 12 million, and Germany and Switzerland are progressing quite fast in donating as well. The URMM will operate through competitive auctions, and the outlay is that the mechanism will be around for 15 years and then hopefully not be needed anymore. Success depends, though, on the financial basis, on the funding. So we're looking at up to 300 million of funding, and definitely encourage donations from various parties. There is definitely still the interlinkage with other mechanisms. So everybody that is involved in this in the larger sense, and a lot are also on the panel here. So the export credit agencies, for example, we will work together with them, obviously. So it is a joint, if you will, package that is responsible for de-risking, especially as we're still lacking war insurance. We've heard from a company just on the previous panel that the German government has given guarantees for their investments. The French are doing the same, the Dutch as well. So that is still going on, and that definitely will not be replaced by the URMM. It is just another mechanism that is trying to sort of fill the gap in terms of de-risking. The operating entity that will run the URMM is still to be contracted. Olga can say more about that, when that might happen. And the basic idea of this de-risking mechanism is there'll be a stabilization price, which will be determined by the auction. That can be different prices depending on the operator. And so you've got the stabilization price and the reference price, and depending on where the pricing goes, you either get, if the actual market price dips, you get support. Otherwise, if the market price goes beyond the stabilization price, then we would build the fund up in order to be able to distribute at the next dip. That is basically the principle. With that, I'll stop and gladly hand over to Olga. Thanks.
Thank you very much, Yuri. Thank you very much, Markus. I don't know even what to say after such a comprehensive introduction. So probably I will say not much, and we'll rely on questions later on. We are really honored to be in partnership with the European Commission in this well overdue exercise of risk stabilization mechanism design for Ukrainian renewables. Probably it's not needed to give an introduction of EBRD and the EBRD role in Ukraine. We are the lead investor in the energy sector of Ukraine, including renewables, and we kickstarted the renewable energy funding in Ukraine back in 2011, post production of relevant legislation. Since start of the war, we invested more than 3.2 billion euro into energy sector of Ukraine alone. And in the power sector of Ukraine, we invested more post-war than we did all previous years. And Ukraine is the second largest country of operations of EBRD. And now about de-risking. We are talking about mitigation of just one risk, is stable cash flow. And stable cash flow is, as you well know, needed for project finance deals. So if you have enough equity to do your project, you can invest into renewable projects in Ukraine, and Ukraine has now the highest tariffs of electricity in Europe, and it's not for the reason. As we speak, Ukraine is suffering blackouts for half of the time in the central region of Ukraine. So there is huge deficit of electricity, especially peaking electricity, but renewables is the only way for the country economy to survive, because yes, we will finance gas, as we discussed in the beginning. Gas is absolutely necessary for covering peaks, but there is no other. We can talk about nuclear will be constructed, but there is no other way forward for Ukraine than renewables. And renewables, these are private investments primarily, unless we are talking about Hydra, which is operating all large hydro capacities in Ukraine, but it's not about state-owned businesses. So it's about private project finance businesses, and only needed for the cases when investors would like to minimize its equity contribution to the projects and cover the risks of offtake in order to attract long-term funding. And indeed, the expectation is that once we collect the necessary funding, as Markus well described, from all donors involved, and I hope going forward, closer to the end of this year, we will see higher stakes of contributions, because really, the more we collect for this de-risking mechanism, the higher renewable package will be supported by this mechanism. The idea is that this mechanism in parallel will be also targeted at design of Ukrainian auctions, which initially were CFD auctions. Right now, Ukraine is designing a bit modified legislation. Let's see whether maybe this will be one-sided CFD auctions, but still success of this Ukrainian exercise to be seen. We well know that the key bottleneck is trust and the financial reliability of counterparts. And together with other donors and IFIs, including World Bank Group, we will be working very closely in design of this parallel scheme, because our de-risking mechanism for the time being is designed to cover from 1 to 1.5 gigawatt of renewable electricity. The key focus will be wind energy. And since all renewables are intermittent and Ukrainian energy sector is lacking balancing capacities, wind, among solar and wind is less intermittent and is meeting demand curve of Ukrainian consumers better than solar. Solar will be probably also added to the package, but likely in combination with battery storages in order to cover balancing side of intermittent solar facilities. The mechanism duration is indeed going to be up to 15 years. It is currently discussed, but major elements of the scheme will be designed once we have independent consultancy team on board and once mechanism administrator is in place, and probably you and other sector investors will hear about more design elements closer to the year end, and the plan is to start launching first auction first half of the next year. The expectation is that, unlike in other countries, Ukraine and this mechanism cannot give much time for investors eligible for this mechanism to organize themselves and prepare projects, collect equity, think about putting together financing package. Major homework will have to be done before counterparts are applying, and the key here is to provide for competitive auctions. So we are looking forward, and probably, I would say that yes, we can mitigate military risk with some maybe expensive military risk insurance, with some protective structures, with some political risk insurances arranged by countries like Germany is doing. But for the risking, I believe it is the first thing to address this major bottleneck for the sector investors to invest in the country. Thank you.
Olga, can I please ask you a very quick question? How do you see the timeline for preparation and implementation of the mechanism?
I believe mechanism will be designed again in close consultations with donors, European Commission, other IFIs to be involved in the mechanism and actually project funding, because this mechanism will not be exclusive for EBRD projects. It will be open to all financiers. The key is that these projects will require long-term funding. And I expect that we will know some details end of this year, but maybe more details end of the first quarter next year. And first auctions will be launched second quarter next year.
Okay, super. Thank you very much. I am passing the floor to Hannes Helm from NOTUS Energy to tell how private investors, see situation and what are the main challenges. Please.
Thank you. I also prepared some slides. Yeah, great. Let me also stand up. Yuri, I thank you very much also for the Leleka video. I'm still deeply moved, I must say. And I agree with the ladies that said it has become personal. I must say I also entered the Ukrainian market in 2020 spring, and since then it has also been a roller coaster ride, and I'm deeply impressed by the resilience of the Ukrainian people. And this is what I wanted to say first before I start. As said, I've been on quite many of those events, and I have the concern from time to time that I'm starting to repeat myself. Still, I prepared some slides on NOTUS Energy to give you a very short introduction of who we are and what we do. I will keep this very short, and if you need more details, you're invited to approach me. And then secondly, I prepared one slide where I want to address also key challenges that we have been faced over the past years as an international investor. Okay, very shortly, NOTUS Energy is based in Potsdam, which is just 1 hour's drive from Berlin. We are covering the whole value chain from basically analysis of the wind resources, securing of the land, then all the engineering, financing, EPC operation. And we are active, maybe we can go to the next slide. We're active in actually rather 15 countries where we're really active. We have installed so far 1.7 gigawatt of megawatts. Yeah, you can see here the countries. And yeah, what I want to say is we have been established in 2001 and since then have implemented quite a lot of wind farms, almost 700 projects. Thank you. Oh, I can do it myself. That's even better. Yes, that's us. Our core markets are historically Germany and also France. We recently expanded our activities dramatically into the Baltics and also the Balkan region. So we have constructed the biggest wind farm in Kosovo, for example. And we entered Ukraine in 2019, and in 2020 I joined NOTUS. Yes, I put together some aspects that I would like to point out. Some of them have been mentioned before in the panel with the investors. I put together basically 3 key challenges that I would like to address, and also I would like to propose some solutions. First, we have heard before, is electricity offtake to make the project eligible for project financing. I see there an interim solution and let's say a midterm solution. We will be one of the few projects who will secure a corporate PPA in Ukraine. But I think the number of bankable off-takers is very limited in terms of, let's say, KYC and also in terms of electricity consumption. So I think this will be probably only a limited and interim solution. Then I also put here the URMM, and here I would like to also address Markus and Olga. From my experience, it would be also very fruitful, I guess, if you also incorporated maybe some investors from the private sector in the design. We have, for example, in Germany, we have had also the introduction of an auction scheme. And I think there are some things that we definitely want to avoid, some lessons learned. And very important are, for example, the pre-qualification criteria. It's a very hard word, pre-qualification criteria. So what projects will be eligible to participate in that auction? Because what we need to understand is that the projects that will be ready to participate in that auction, that are advanced, have been developed during the war with considerable increased cost and time. So, and in order to have a level playing field, the pre-qualification criteria should be designed in a way that those projects that have been developed during the past years are competitive. Yeah. So if you set the standards too low, then the price will be artificially low, but the realization rate will be very low. So I think to find a balance here is very important, and we have seen examples. Everyone from Germany knows Bürgergesellschaft, maybe, where you had like very low participation criteria, and most of the projects were never realized. So in order to avoid that, I think it's very important to also look into that. And secondly, it was also mentioned before that the return requirements are exceptionally high in Ukraine for obvious reasons, right? The risk profile is very high, and it needs to allow for sufficient upside, right? Because no equity investor will participate if it's as I understood, if it's a two-sided contract for difference model, where you basically pay in every upside into the fund, because I guess then you have just, there probably won't be enough incentive for investors to go this way. Yes, and then a midterm, I guess it was raised by Eleanor and was very happy to hear it. I think that yeah, financing based on the merchant market will probably be a point in the future. Probably have to hurry a little bit. Regulatory barriers, the way I look at market, or we look at market, it's important that Ukraine increases its relatively attractiveness to foreign investors. There are some things that Ukraine can't change, but there are some things that can be changed. We have discussed so far the exclusion of import VAT on wind turbines, for example. The VAT reimbursement procedures should be clear. So for us to understand what liquidity we will need in order to implement a project, it very much depends also on those things. And also the new grid application procedure is very welcome by us, but I think also it would be great as there would be also the chance to, for example, give grid bonds instead of to have this on an account, pay this in an account. And then something also, as I said, we've been in the market for quite some time now, and there are certain services that we cannot pay because there are currency restrictions, and there are also certain loans that cannot be repaid because of currency control. So those are also things that are in the hands of the regulatory bodies to omit those barriers, because it's really crucial for us that, of course, we can repatriate the invested funds without any delay and problems. So this would be something I would like to highlight. And the third challenge that I see is basically we are faced with a lot of carve-outs. So we're dealing with a lot of let's say, challenges that we are not facing in other projects. So for example, regarding logistics and installation, it was mentioned before. So we have to organize the logistic from somewhere out of Ukraine into Ukraine to the site. We have to do the installation, the crane services. Then we discussed a lot about war insurance. Here I would like to make a small differentiation, which is important. So when we talk about the investment guarantee of the federal state of Germany, this covers against total loss, right? It's not a commercial insurance as it is. It doesn't. If one turbine is destroyed, it will not be compensated, at least to my understanding. It means if in the long term your project is not feasible anymore, then it will cover it. So what I'm talking about here is really the insurance that will cover if, for example, during transport your freight is damaged. Then there are certain insurance are simply not available, and this is also important for each IFI to understand that, of course, when we talk about conditions for financing, some insurance are simply not available. I put here something business interruption, and then there are also certain exclusions under the maintenance and service agreements with the suppliers. So we'll do our best to accommodate all requirements, but we also need to be realistic. Yes, I guess I will leave it at this. Yeah.
If possible, just two quick questions. First question, you mentioned that you will have corporate PPA. So just question, how much time did it take for you to get it?
Yes, we have been negotiating for years now. Not the number 4, but for many years. and the ink is still not dry. So you must understand that there hasn't been any long-term PPA in Ukraine. So the longest I know is something like a year. And now someone is asking you to get it for 15 plus years. So this is a big challenge. And I think we were pioneering the market because it was a lot about education also, on both sides, by the way. So I don't want to be arrogant. We also learned a lot. We are very confident that we'll have the first, or not the first maybe, but this corporate deal very soon.
And second question, when you go for structuring your second project, will you jump into URMM or you will still go with PPAs?
As I said, it will very much depend on the design of that's why I try to underline it. The design will be crucial because we have seen a history in Ukraine with auctions that basically failed, right? So either there was too little interest and that is why I think we should work together to avoid this.
Super, thank you very much. And now we have our next speaker who will join online. It's Matthias Koster from PwC that runs German investment guarantee scheme, and he will tell us about respective German experience of providing investment guarantees. So I will ask my colleagues to connect Matthias.
All right, can you hear me already?
Yes, we hear you well, but so far we don't see you, but I think it's coming.
That's great. It's great that you can hear me, and it's even better maybe that you cannot see me. Well, I will switch the camera on now. Come on, for the joke.
Yeah, no, we see you.
So, now you can see me. Those who know me will be surprised that I'm wearing a beard. I can tell you one thing, whenever you see me wearing a beard, that's not a good sign. I'm normally not wearing one. I've been sick for the past few days, mostly lying in bed. That's why I cannot be with you, unfortunately, but thank you very much to EUEA who made it possible so that I can be with you, at least virtually. As it was rightly mentioned, I work at PwC Germany, who's the mandatory of the German federal government regarding the investment guarantee scheme. We are managing the scheme on behalf of the government. And the last time that I was in the panel in person was last week. And I was in Berlin during the Foreign Trade Day, as it is called, of the German federal government, the German Ministry for Economic Affairs. And after the panel, a lady came to me and she asked a few questions. And one question she asked was, Matthias, the slide behind you, which mentioned the names and the roles of the panelists, said that you are head of Ukraine desk and head of healthcare and chemical industries. How do these fit together? Why Ukraine and healthcare and chemicals? And I told her, look, this guarantee scheme has been running for several decades, more than 60 years now. And we've always been organized by industries, not by countries. But after the expansion of Russia's aggression against Ukraine, there was such a massive demand by German businesses for investment guarantees for Ukraine that we were establishing this Ukraine desk. There is no other country desk. I'm the only one working on a specific country, namely Ukraine. And this shows you how important this instrument is maybe for German investors, I think, for German investors who think about investing in Ukraine today. So how does it work? It has already been mentioned quite a few times. I will keep it short and simple. Imagine there is a company based in Germany, a parent company. This parent company based in Germany has got a subsidiary company in Ukraine, and this German parent company directly invests into the subsidiary company in Ukraine. So this is the case that we talk about. Either when the German parent company newly establishes a subsidiary in Ukraine, or whether they invest new money in an existing subsidiary, or the German parent company buys shares in an already existing Ukrainian company and wants to get the purchase price insured, and then also other investments which are made into the company later on. So if in some way there's the German parent company, the subsidiary company in Ukraine, and there's a direct investment, equity or intercompany loan from the German investor to the subsidiary company in Ukraine, then you are generally eligible to apply for such an investment guarantee. What does the guarantee cover against? It's basically three things. So first, war, as has already been mentioned, and this is why many companies are using the scheme for Ukraine. It's exactly as Helm mentioned just now. It's a total loss insurance if you talk about the war risk. So that if the company in Ukraine, the subsidiary company, cannot go on because they were hit by a missile or whatever and the investment is lost, then the German government would compensate for this loss. And this is unfortunately not an unrealistic scenario. And after the expansion of Russia's aggression, the German government already had to pay for war-related losses in Ukraine. So this is why most companies use it right now, because they are afraid of a loss of their investment due to the war. A second thing that is covered is expropriation. So if Ukrainian entities, if Ukrainian state-owned entities interfered with the project in an expropriative manner, then this would also lead to a claim under the guarantee scheme. This is not, to my knowledge, what German investors are afraid of right now, but it would generally be covered. So that's second, expropriation. first war, second expropriation. And the third main category is convertibility and transfer. So again, we've got the parent company in Germany, subsidiary company in Ukraine. German parent company directly invests into the subsidiary company in Ukraine. Then hopefully the subsidiary company in Ukraine at some point earns money, wants to repatriate some of this money to pay a dividend, for example, or to repay a loan. Then there might be capital controls, and you may know the resolution number 18 of the National Bank of Ukraine, which makes it harder, at least, to repatriate profits. Also, these convertibility and transfer risks, they can lead to a claim under the guarantee scheme. Okay, so that's how it works. Maybe to finish off, just one number: the German government issued 50 guarantees, 50, for Ukraine, about 50 after the expansion of Russia's aggression, with an investment volume of several hundred million euros, more than 400 million.
Matthias, thank you so much, and we especially appreciate that you made this effort despite health conditions. So thank you so much.
And if you have questions, please always get back to me. Thank you.
Yeah, super. And I am passing the floor to Michael Geske from Euler Hermes, and he will cover another side of German guarantees, now with focus on export guarantees. Please.
Thank you very much, and thank you all also very much for giving me the opportunity to speak today. My name is Michael Geske, or Michael Geske, and I'm working at Euler Hermes for a bit more than 15 years now, and I've always been active in this region, and Ukraine always has been a focus market for me. And Ukraine is not the only country I'm responsible for. I'm in charge of Central Asia and Southern Caucasus. But in my day-to-day business, Ukraine really is the focus market and really the main thing I have to do. And I think talking a little bit about Euler Hermes, we are similarly set up than PwC in the investment guarantee scheme as just described. We are working on behalf of the German government, issuing the export credit guarantees of the German government. And so therefore, we are acting as a so-called export credit agency, or shortly ECA. This term is usually used quite often. What does an ECA, and especially Euler Hermes, do? Principally spoken, we focus on German export contracts and ensuring the major risk related to the export in favor of the German exporter. So that's the classical business we are involved in, meaning the major risk, of course, for the exporter is the non-payment risk when he delivers goods to a specific country and for political or economical reasons, a non-repayment occurs. So this is the principal thing we do, and we ensure other risks related to that. For example, so-called fabrication risk or construction risk. So if during the construction period something happens and the goods cannot be delivered by the manufacturer individually, this is also a risk that we can cover, and we can also ensure the non-payment risk or the unfair calling of credit guarantees, so down payment guarantees and so on. So I think the major, of course, these are advantages for the German exporter, but for the buyer, there are advantages as well, because this can help to get the right conditions into a contract that otherwise would be hard to negotiate. So if there's a manufacturing risk cover behind it, this might reduce the necessity of a high down payment. And the same applies if we ensure the contractual guarantees. So this is what we principally do on the exporter side. But more interesting for the buyer is the question of the financing. So the classical thing, again, is that the exporter makes favorable repayment terms as a supplier credit for his buyer, meaning on his own account, he issues a loan for 5 years or more for the repayment. So this is something, again, non-payment risk. We can support that, but this is usually just the case for smaller and a maximum medium-sized transaction. But we can also transfer that export contract into a commercial contract from a bank. So if a bank coming from Germany or other European countries finances the export contract, we can also issue cover for that, again for the non-repayment risks. And since we're acting on behalf of the government, our cover benefits from Germany's AAA rating, which reduces then again the risk premium the bank charges within their financing conditions. And the other thing is that since we are working on federal budget, we are very flexible with regard to the tenor, the repayment period. In principle, we can offer up to 15 years, and for renewable sector, it's even 22 years, everything plus construction. So there's a very long-term perspective behind it, which can make the financing attractive, at least as part of the financing. What we can finance is up to 85% of the German exporter's contract value, plus 100% of our premium, which needs to be paid in one sum before the start of down payment or disbursements. And that's, I think, the attractiveness, and I think most part of our business. If you look upon our covered volume, last year we covered roughly 16 billion euros worldwide. Most of it really is these buyer credits, so commercial banks financing deals from exporters. But both parts of the business remain really an important part. Coming to Ukraine, it has always been a focus of our government to support Ukraine in the best possible way, also through our instrument, since the war started especially. And so therefore the cover facilities were always kept open in those years. And the one thing I want to point out here is there's a lot of willingness and flexibility from our government. So I come later to the conditions for cover and the requirements. If there's a project in the pipeline and something really doesn't fit to 100%, I just encourage you, give us a call, let us talk, and we can see where we can find a solution. This is really crucial with that regard. For short-term business, we do not have a formal country ceiling and so on, so we can really open for newly covered business. And just to provide you with a number, for the first 6 months of this year, we have covered a lot more than 400 million euros just between January and June, which is again significantly higher than the 12 months for the previous year, and it's also significantly higher than everything we've done before the war. So the demand is there and the willingness is there to support. This is the short-term business. For medium-long-term, meaning everything above 1 year, there we've got a country ceiling of 250 million euro, so also a significant number. And in principle, we say the single transaction should not exceed 10 million. But the country cover policy already says if the project deserves a promotion, meaning if there's a good story behind it, why the project should be supported, we can also cover significant higher amounts. And I've seen principles of promises of cover where really higher amounts, significant, multiple times the 10 million, were granted cover for. So if you've got bigger projects in the pipeline, don't be discouraged by the 10 million. Give us a call, we can discuss, and I think we will find solutions. Yeah, and in principle, I can also add to that in the willingness from our government is there. We've also issued promises of cover for big projects, but it's quite difficult for the time being to find funding or banks willing to do so. Again, we should stay in contact, include us in the discussions with the bank where the pain points are. And the German investment bank, DEG, is currently also working on the possibility to issuing buyer credit loans under Hermes cover for smaller to medium-sized projects. And for the bigger projects, I think there's a certain demand on the market or a certain credit appetite for the banks. So I think there's development in there, but I think it will take some time before these deals are finalized. But we are open and we are very much looking forward to the discussions. Thank you very much.
Super. Thank you very much. It's really great, to see that Germany has stepped forward, with guarantees available for Ukraine. And now we are passing the floor to Peder, Anker, Larsen to tell about Denmark's contribution and experience in this area. Please.
And thank you to the Ukraine and European Energy Agency for inviting us again this year. It's a pleasure. And let me first say that last year, and when I attended, we discussed it a lot, the PPA and the facilities and what should be in function there. And now I hear a lot of positive things about establishing a PPA regime. We're not there, but we are certainly a long way. So progress has been made since last year, and I would like to emphasize on that. I think that's positive. Then, of course, I would like to tell you a bit more about what IFO is doing. And Michael, thank you for presenting what an ECA is basically doing. So I will skip that part because you told it very fine, explicitly. But I would say the Danish ECA, what we have done in Ukraine was basically after the second illegal invasion in Ukraine in 22, they rather reluctant decided to support on the rebuild of Ukraine, even though that the war is ongoing. And we're still there to rebuild Ukraine, and we're happy to do so. And that, of course, I would like to tell you a bit about, but of course, I promised not to talk about risk mitigation, but I should be a very bad salesperson if I wasn't just doing a bit introduction to IFO. So IFO is the Danish Export Credit Agency, and as said before, we have a AAA rating, basically meaning whatever we guaranteeing, when we guaranteeing a buyer or seller, then you swap the risk with the risk of the seller to an ECA with a AAA rating. So that's quite a good swap. And that's basically, you could say, what we're doing because we are covering war risks and commercial risk. But what we explored in Ukraine at the beginning was that we were alone, you could say, but that has never been the case. But it was difficult for us to attract banks to work in Ukraine with us. So therefore, we also established a loan facility. And right now, you could say that the funds we are available for Ukraine is, as you can see up here, 955 million euros. We have, of course, spent some of those, luckily I would say, and a lot of it has been spent on the energy, on renewable energy, especially wind parks. But we have still more funds to spend in Ukraine. You could say the tricky part working with an ECA, either German or the Danish ECA, that there needs to be some local content. So you could say when you're speaking with the Danish ECA, we would require that there has to be Danish content, or the same goes for Michael when it's the German ECA, that there needs to be German content. But in our case, I would say we only need 30% Danish content. So 70% could be content coming from other countries. Basically, and I would say that we have looked into transactions. The first transaction we did, basically we covered a lot of German content there. And that's just to tell you that we are flexible and we are in a situation where we need to work together to overcome the difficulties. And we're happy to do so. Speaking about taking the risk cover, normally it's a sound principle of not covering 100% of a risk. It's good to keep person you cover some residual risk to make them aware that they also have a risk. We have decided that because of this special situation in Ukraine, because of the war simply, we have decided to cover 100%, to leave no residual risk with the banks or the commercial companies that we're working with. We are taking the political commercial risk when we're doing the coverage. And that's special, of course, and it will stay so as long as the war is ongoing. We are hopefully, you could say, one day we all hope for that the war will end and then our cover of risk will go down. But so far, it's 100%. And yes, Michael, you covered so fine. We are in the same business and we are in the long run, so we could cover up to 15 years. There's a question there. Is it okay? Could we keep it for after and then? And for energy projects up to 22 years. So far, we haven't gone up to these numbers yet because the projects has not needed it. But if it's needed, we will do so. Going the wrong way here. This is basically to say that we have two programs, one for the commercial sector and one for the public sector. And the one thing that I would like to highlight here is working with public companies or entities, then we have the possibility of coming up with a grant of 40% of the loan or the guarantee amount that we are providing. So that can be quite huge. So far, we haven't worked in the energy sector with public entities. It has been more diverted to the private sector, but there we have issued grants of up to 40%. For private companies, there is no, you could say, grant component. There we just say we are there and we will willing to finance you on the terms of an ECA. And the reason for me saying that is the pricing is agreed among the ECA, so you could say our price is more or less fixed. So that's basically you could say that's the two possibilities, but you can also basically say these two programs will cover all projects that you could imagine in Ukraine. On the other hand, I would also say that our money, since it's a special dedication from the government, I would say our money is dedicated to basically to more infrastructure related projects. And it's not only necessary energy or water, it also covers other things, but of course it has to be what we believe is essential needs in Ukraine at the moment. And this slide is just to tell you that we're not only talking, we are actually there. And I have a colleague working in Ukraine, and he's all over the country, I would say. And then we have our Copenhagen office that's, you could say, give him the backup. And I just want the slide speaks for itself, but you can see that we're active in quite many sectors. We haven't closed that many projects yet, basically 20, but we're still progressing and we are open for more business. So please come forward, and if you have projects, then we like to discuss basically. This should be my final slide. I would say the main thing I would like to say with this slide is that, as I said before, working with us would require that you have some kind of Danish content. Secondly, we like to hear about your projects, but before we really go into the project, we need to make sure that it's mature. We are not able to develop projects. We expect to you can see, receive developed projects. We are willing to discuss projects and to tell you what we think that should be developed, but we cannot take part of the development as some of the big organizations, EBRD and IFC here. These guys are very good at doing the development. We are not so strong at that. Then of course we are looking to the credit risk as any other financial institutions, and all the KYC stuff and economical things and ESG. Straightforward as any other institution, and what we have seen in Ukraine is that a lot of the buyers there are maybe not used to it, but are prepared to work with us on these issues. I guess that's basically cover what I would like to say today. This is finally, if you get to that point and you have a project that you think we should be involved in, you can find our expression of interest at our homepage, and there you can fill it out, or you could just simply contact us, and then we will come back to you on whether it's a project that we can go into. Okay, so that's.
Thank you. Can I just ask one quick question? You mentioned, your experience with financing, wind project in Ukraine. Just, it's interesting how much time did it take for you really to structure and complete, this whole process?
From the beginning to the end, 2.5 years, and then they were working very, very fast. The last 4 months, it's no secret. It was together with DTEC, and everybody was very stressed at the final moment. But we succeeded, all of us. Seen as a team, and but 2.5 years, I would say. That was also a special transaction, and first we worked with one structure, and then we have to switch to another structure. But
that was cool.
There was a question here. Yeah.
Thank you very much. You mentioned in your presentation political risk and war damages. Can you explain exactly how that works? I think that was a very important part, but very little attention.
Yeah, but you could say that when it comes to political risk and war damage, First of all, when I guarantee a bank or private company for their repayment of their loans, then they have no risk at the war, because if they not getting paid because a bomb is, or the project or the factory is destroyed by as a consequence of the war, then I will repay the bank. So that's you could say that's the war damage. I work in Ukraine, and we are aware of the risk. And you could say normally an ECA will probably go off cover in a country where we see Ukraine are right now. But as it's very important for the Danish government to be there, then we say war damage is covered. And that's also go for the political risk insurance, as you heard before, Mr. Koster. He was talking about we have exactly the same product. So we are aware of the risk is there, and we cover it.
Thank you. We are getting to the questions section, so please, if you have any questions, raise your hand, and my colleagues will give you microphone. Use unique chance while EBRD and European Commission are on stage, and you can ask them about URMM. I know that they like these questions. Please.
My name is Boris Westphal from Dornier Suntrace. We consult in renewable energies and also based in Ukraine. My question goes to Michael. For the ECA coverage, usually local content is needed, as Peder also mentioned. We all know that wind may be local content from Germany, but photovoltaics, that's quite thin, yeah, because most of the stuff comes from China. So I know that you're covering more than probably we have as local content. If deliveries come from Germany to Ukraine, how much is it? How much can be covered? If you think of the larger financing, so these 15 to 18 years long-term project financings, how much could be ECA covered by Hermes? Thank you.
It very much depends, to be honest. Thank you for the question, first of all. In principle, we say for any project, it should be at least 51% of German content, and in the renewable sector, we only require 30% of German content, in principle. But then, as I said, the funds available for covering larger deals in Ukraine are limited to this 250 million. So therefore, we have to be a little bit more strict, or need to look closer to it, so to say. So I think we should be quite creative and see what is possible, why is a certain foreign content required to a certain extent, and to what degree can we mitigate the foreign content by maybe adding other sources of financing to it. So we should definitely stay in contact, and yeah, the basis is, as I said, 30% German, 70% from third countries, but we should definitely need to argument well when it comes to countries where the funds available for cover are restricted or are limited. So yeah, I think it requires a dialogue, and then we need to think what is the overall financing structure. Is there maybe a possibility for a reinsurance with another ECA where significant content can come from, and then we can see the overall picture, how much German content in the overall risk is needed, and then we need to argument and take the journey from there. But this is definitely something we need to discuss. Where I said our guardian authorities are really flexible and really willing to support Ukraine in the best possible way, and I think there we need to make quite a good picture of what is needed and why it is needed, and then we need to think of solutions.
Thank you. Next question from Bernd.
About this contract for difference auction. Just one clarification to make sure I understand, so that it's an instrument that you will participate in when you have your equity investor and you have your debt. So basically more around the financial close timing of your project. Is that correctly understood?
Just so that I understood your question correctly, you are talking about EBRD?
Yeah, I'm talking about
Yeah.
minimum price mechanism.
Yeah.
And you talked about when does it take place for your project? How mature does it have to be?
Actually, it's not that important. Also, we can even consider those projects which are at very advanced stage of our approvals to apply for this mechanism. It's really irrelevant at which stage of transaction processing with EBRD you are applying, unless, of course, you secured final approval of the transaction. So prior to final review, so that we take into account your eligibility for the de-risking mechanism, you still can benefit from structuring elements reflecting the fact that you will benefit from de-risking. Because I believe participation in the de-risking mechanism will bring a lot of benefits not only to lenders but also to equity investors. Because when Hannes, you mentioned about IRR, yeah, talking about the risking mechanism, you need to keep in mind that your offtake will be AAA guaranteed by EBRD and European Commission and other donors. It will be totally different risk profile of the transaction. Of course, you will still bear some Ukrainian risks, especially related to military risks, but it will be different transaction and different IRR involved.
And just, small comment, in any case, from design point of view, there will be market sounding, when EBRD moves forward, with designing, this mechanism together with consultants, there will be close dialogue, with all financiers, IFIs, banks, investors, because again, the idea is to make it as practical as possible and to help financing specific projects which are ready, for implementation. That's why, we really envisage that there will be, many opportunities for further dialogue on this topic. Please, if anybody has further questions. I think I will ask one question for Markus. Can you please tell us a few words about Ukraine facility, how it's standing right now, how many years are left, and what will happen after? Because as I mentioned, it's a kind of backbone right now for financing many private projects under Pillar 2. So how it's going and what will happen next?
Yeah, thanks very much, yes. So the Ukraine facility will operate until the end of 2027. That's the 50 billion, if you will, armament for Ukraine. It's divided into 3 pillars. There's the pillar 1, which is basically budget support that goes directly to Ukraine, where Ukraine decides where that money goes to. That's about 38 billion. Then there is the pillar 2, which we call the Ukraine Investment Framework. That is the part that also underpins the URMM and the money, and that's about 9.4 billion that is being leveraged with the IFIs for exclusively capex. That is still going on and very much project pipelines being developed. And then Pillar 3, which was originally for more technical assistance, but that is, for example, where the financing partially towards the energy emergency recovery fund that the energy community is running is also being funded through. The question then is what happens after 2027, which I think you really asked. And that at this stage it's too early to ask. It will be part of the next MFF, so the multi-annual financial framework, which is the big box where the entire EU budget is being mapped out, and also the assistance for Ukraine. So those discussions are going on, but again at this stage it's really too early to say. The only thing I would say is that the supporters for Ukraine, the member states, private companies, donors of various sorts that have been there now side by side with Ukraine will also be there going forward. So that, I think, is no doubt. And as we are seeing with some of the mechanisms, facilities that we are trying to establish and putting out there, they do attract more donors from wide and far. So I'm quite positive that we can sort of build and expand that platform further for yet more support for Ukraine. Thanks.
Super. Thank you. I think unless there are further questions from the audience, I think we will stop here. And I thank you very much to all our speakers and panel members. So thank you.
Thank you, Yuri. Thank you, colleagues. Now